Happy February 15th. Here it is, short-term trade on S&P day trading levels. Key Fibonacci target is reached very quickly. Stop outside of break-even. This hot pink level is always present. That's exactly why it is so pink and so hot that you would never ignore it. This was exact same hot pink level on S&P weekly. My favorite chart. Yesterday I worked with hedge funds who using my method on gold, who invested in gold since December 2016. This is the key level they respect on gold trade. S&P is off to the races. S&P broke through second target. When it comes to day trading, you're witnessing the accuracy of my method instantly. Same exact levels institutions using on long-term charts. So, will S&P blast through this level? Do you know what you're paying attention to? Do you have sweaty palms? Do you have an illusion that being a follower in day trading is a recipe to success? The only thing that works in life is knowledge. That is constant. It doesn't matter if you day trade S&P. It doesn't matter if you trade Apple monthly. Exact same hot pink level. Did you invest on Apple despite the worst earnings in 13 years? Apple is off to the races. Are you exiting your position or do you know what to expect on Apple next? Last time Apple collapsed from this level despite spectacular earnings. Do you know what to do with your trade on Apple? Knowledge of Fibonacci levels is everything. Using anything else is simply afterthought. Using anything else is simply delayed. As I said, for years, this chart been present in front of you for years. S&P is heading to 2500. Exact same accuracy you're witnessing in front of you on baby chart S&P. Exact same levels we will be witnessing on oil 1 hour from now. This is chart on oil and this is what we've been working with since early January. Horrific news on oil January 11th, bullish rally because Fibonacci said so. Hot pink level respected exact same way as you're witnessing on S&P right now. Bullish rally is 300 points. Oil reversed as expected. Another horrific bearish news on oil and Fibonacci says market will rally. Oil once again reached this level. Once again oil collapsed from this level. Last week one of the worst bearish news on record on oil. And once again oil rallied. What a dance. This morning we will witness oil 15 minutes from now. This is your Fibonacci support and this is your Fibonacci resistance. This is what we're dealing with right now. Looks familiar? Same exact level on S&P. Different strategy. Accuracy of Fibonacci levels that you're witnessing in front of you each and every morning on S&P applies to any instrument and any time frame. Doesn't matter what you trade. Doesn't matter if it's Apple. Doesn't matter if it's Euro. Doesn't matter if it's Valiant. Doesn't matter if it's ETFs. Doesn't matter if it's gold. Does it look familiar what gold had done? This was bullish entry last year. This is where gold ended bullish rally. Funds I work with had been acquiring position on gold since this area, December 2016. This is key Fibonacci support on gold. This is where gold collapsed from, exact same hot pink level in 2016. As long as this support on gold is respected, bullish rally will go on. Knowing where to enter and knowing where to exit the position is everything. And this is where S&P remains as expected. Exact same level. Doesn't matter what you trade. If you just remove the name from your chart, you will see very clearly. Exact same dance remains. It doesn't matter what you trade. It doesn't matter if it's 5-minute chart. It doesn't matter if it's DAX. It doesn't matter if you invest on oil long term. This is my favorite chart, weekly, on oil. This is the reason why graduates of the course becoming my dearest friends forever. As graduates of the course been acquiring position on oil at 30. Remember oil? Remember war zone at hot pink line at this level? Did you take the profits off the table? Did you move your stop outside of break even, just like you were supposed to do on S&P? As S&P continue rallying? As expected, as I've been telling you, institutional bullish bias we've been witnessing is breathtaking. Yearly large caps, ETFs, knowing which to take a look at, you're witnessing the rally of the century. Once again, America will be on top of the world. Once again, US dollar will rally. If you understand and pay attention to yearly charts using exact same method, you don't need financial advisors. You don't need anything else. You just need to pay attention to Fibonacci levels using exact same formula on yearly. And that's what I do when I work with my beautiful alphas who become my dearest friends for life. Market is flawless Fibonacci puzzle, and I live and breathe what I do. Because I know how I spend my time and who I spend it with. I spend my time with people dearest to me. I spend my time with alphas. And I spend my time with Fibonacci. As this is all that matters. Fibonacci surrounds you in everything. When you look in the mirror, you look at Fibonacci, you look at perfect symmetry in the mirror. When you look at flowers, you look at Fibonacci, you look at perfect symmetry every time. When you look at price, Fibonacci everywhere. When you look on oil, it's dancing in massive correction on weekly. Both trends are minor. Both trends are weak. Oil is struggling at this Fibonacci resistance the same exact way as S&P. So, institutional bias remains firmly bullish. Institutional buying breathtaking. Unless we're gonna have major terrorist event, United States is off to the races. Once again, America will be on top of the world. And I'm sorry to say, but this support on euro will be broken. The chart that I have in front of you for years, just a reminder, this was 2014. Remember reversal zone on euro? Did you get out of euro? Did you move to US dollar? Remember that crucial hot pink line on euro at 3400? That hot pink line on euro I posted before I left on vacation in 2014 was broken. Just like it's being broken on S&P in front of you, except to the upside, as expected. This is where a hot pink line on euro been present in front of you since 2015. I said euro is heading down, 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 80 and 50 next. Did I know that euro will respect this level for 2 years? No, I did not. Did I know that pound will go into free fall because of Brexit? It doesn't matter. The only thing that matters is Fibonacci. This is pound. Remember that chart? Does that look familiar? Pound at 2100, pound at 36, 3500. Pound already broke through this target. Pound already at 19. I'm telling you, pound is heading to 1-1. And that's exact same accuracy you're witnessing on S&P baby chart. Your daily quota is met. That's all that matters, each and every time. Don't be silly. Don't waste your time on delayed indicators. You don't need them, I promise you. The only thing that's constant in life is knowledge. The only thing that matters, how you spend your time and who you spend it with. Give yourself a big favor. Don't spend your time shopping for indicators. Don't become a shopper. Become a knowledgeable trader. In the course, you learned that this is key Fibonacci target on S&P. When price comes to this target and you're trading with a trend, you always move your stop outside of break-even. This is a chart that's been present in front of you since the start of the website in 2011. If you remember this massive bearish correction in 2013-2014, I told you it is all about this decision point too, as I was in Dubai meeting with my students and communicating with students in New York about this level. It was all about 1800. If 1800 was broken, market would go into free fall. It was not broken. Market skyrocketed higher. And as I said to you, bullish rally will continue. My favorite event of the year, election night, was absolutely breathtaking. As Fibonacci said, doesn't matter who will win. Bullish rally just begun. As Fibonacci reversal zone shown very clearly. Long S&P. Doesn't matter if it's Hillary, doesn't matter if it's Trump. Doesn't matter what you trade. Do you trade daily? Do you invest via S&P index monthly? Are you a day trader? Risk management and day trader psychology very different. What you trade absolutely up to you. I work with traders from beginner trader to hedge fund managers who using my method from very small accounts to very large accounts. Because fund managers know, and they learn through years, fundamentals do not work. Indicators do not work. The only thing that works is price action and Fibonacci. That pure and that simple. So if you want to trade like Kurt, who's been trying for over 20 years, and now he came to the course, he works full-time, this is what he accomplished. 10 out of 10. He spends a couple of minutes per day, he trades Asian and European session, he doesn't babysit the screen. 1 week. 10 out of 10. Can you do that? Do you stare at the screen? Do you know what chart to trade? All you need to do is spend 10 minutes per hour in front of the screen. And that will be the focus of the bootcamp. We're down to 11 spaces, traders. If you sign up for the course in the month of February, you will be privileged to join us in a bootcamp, savings of $888 to new students only, where we will be working and looking how to trade 10 minutes per hour maximum, how to trade like Kurt, how to trade like Tashi, how to trade like Sam. Those students who accomplished incredible success with the method will be attending bootcamp. Sam will be speaking in a bootcamp. Any of the students who are willing to share will be speaking in a bootcamp. Every single one of the students using the method on different instruments and different time frames. What you trade, absolutely up to you. 10 out of 10, 10 minutes per hour. That's all you have to do.